Hey, how are you guys? Happy Friday. Happy Friday for everyone. How are you doing today? Let me open the chat here. It's good. Hello, Deepti. Hola, Tocayo. Hi, Robert. Hi, Diane. Hello, Ilya. Happy OPEX, happy OPEX Friday. I know. Hey, Ilya, were you able to open the link I sent you yesterday? Hi, Joseph. Hi, Salman. You did. All right. Yeah, you're very welcome. All right, guys. Let's give a few seconds more. Let's see if more people can join. Today is gonna be kind of interesting because I've been watching a ton of good opportunities, and I know, I know. Hello, Tassos. Hi, Alex. So I know some of them or many of them will not be into our regular usual standard playbook, but you will see that many of them make sense, right? So today we are gonna play with the market structure. So I just hope that Ilya had a chance to actually watch that video I sent yesterday to him, because market structure is everything, right? So it's one of the easiest ways to trade. So once you identify direction on a name or even on an index, it's everything becomes very easy. Everything becomes very easy. And also you can actually, identify good entry points even outside of our playbook. So you will see today. So we are now 25, no, 22, only 22. All right, well, and maybe it's only 21 because one of the users it's me with my other with my other computer. All right. So okay, well, let's get started. So I want to talk about SPY and QQQ first. All right. So you can see this move here. You can see this move here. We open. We were just flirting inside this range here between the pre-market high, 5 minute opening range low. So we were, trying to go higher this morning, but it's OPEX Friday. So it's not a rule. It's not a rule because it's not. It's not a rule. But usually OPEX Fridays we just dump. I don't know why, but that's what we do. And I'm not gonna tell you that this is supposed to be common sense or like general understanding because I actually had a long trade. I was buying calls on Nvidia, so I was actually doing the opposite, right? But anyways, I'm gonna show you. But usually, OPEX Fridays, you can go watch your trading view, identify OPEX Fridays, and you will see that there's more days than not. Again, this is not a rule. This is not a rule, but it's kind of a something I feel every OPEX Friday. We always dump on Friday. I don't know. So back test it, take a look to it, and let me know what you find. All right? Let me know what you find. Okay, so hi, Rael. Welcome. All right. So today, Apple. So don't trust Apple, but you know what? Apple has been moving nicely these past days. And when I say nicely, it's not like we can, find out with anticipation what it's doing, but it has been just moving from one key level to the other. So here you can see this, right? So we pump in the morning. It actually had a lot of strength. This name was looking super good. This name was looking super good. It reclaimed this 200 key level. This is very important key level. It's a psych number, round number, strike number. So everything in this 200 was very important, right? So we reclaimed this 200, and then we had this pullback here where it was kind of close to this 5 minute opening range. But look at this. When Apple stopped pumping, indices, they were hitting key levels. So QQQ was hitting 533.33. That's a key level on the daily chart. And SPY was uh, retesting 599.30. That's pre-market high, right? That's pre-market high. So once we hit this external liquidity here for Apple, we had this hard rejection, and then we had this retest. So in terms of market structure, this is a lower high. This is a lower high. So if we have a lower high, what is expected now? Well, a lower low. And then if we want to see market structure to continue, hey Chris, welcome. If we want market structure to continue, we should be looking what? A higher high, right? So we are actually right here, breaking and retesting this area here. This is a local pivot here. This is the first support, turn resistance now, order block here, break, retest, and now we have another lower high. All right, so we have another lower high. So what is expected here, guys? Type in the chat, what is expected here? Lower high, lower low, lower high, lower low, lower high. What is expected now? Lower low, exactly. So my expectation here is at least the break of this previous local low, local pivot, right? So if you are taking a trade right here, when the market structure is kind of clear now because it's struggling with this support turn resistance now, order block here, local pivot here. So what is expected here? Well, to go lower than the previous lower low, all right? So, well, you know the drill. This is just for the art of charting, but this is exactly that you will see in most of the names today. So I want you to understand market structure, because once the trend is not a trend anymore, you need to start looking for what the price is doing. And here it was kind of easy to identify what I was doing. All right. And it was kind of the same with the indices. So at the end, for the first time ever, no, it's not the first time, but this is not usual. I have a few plays for you on SPY and QQQ. So don't please wait for the end. You will see. Uh, lower low, lower low, more lower, lower low. It's so simple. How did I miss it? Well, which video you recommended for market structure? So Deepti, do this. In yesterday's video, Ilya asked me for this same video of market structure on the comments. So please go look in the yesterday's video, and on the comments look for the wine with Ilya comment, and in one of the responses I attached a link for a market structure video. So you will see that, and it's really easy to understand. That's how most of the people here in this community learn about market structure. So just take a look to it. Okay, so this was the Apple. This was one of the Apple trades that I was watching here. Again, this is what I have another community that I like a lot because the coach has a lot of empowerment and this Mamba mentality. Like uh, improving, getting better, 1% every day. And one of his favorite moves is what he calls the pull counter. It's a boxing move. It's like when like you fake a hit so you can hit with the other hand. So this is kind of it, right? It tries but fails to create a higher high or a new high. So basically, what he's expecting is to start going lower. All right. So this was Apple, and let's go to AMD. AMD, just as Apple, we all were waiting for, well, not waiting. We all were watching how strong this pump was. Then it came back, retested nicely with this candle wick here, this 131.71. That's a key level on the daily chart. And I will open a position here. I know this is indices going down, but look how well, I mean, look this all of the strong here. How strong was this? How strong was this move? And how well it reacted to this key level here. And it actually started working, failed, same key level here, started working, and at this second fail, I will say like, well, this is not for today, right? This is not for today. So if this thing is failing twice on the same spot, can you see here? This is the high of the day. If we are failing twice on the same spot, I will cut my trade right here. I wouldn't wait for the stop loss to actually be hit. So this is a trade that didn't work, and it didn't work despite all the relative strength here, But what the indices were doing, they were pushing hard to the downside. So look at this right here on this attempt for higher for a new high of the day, right here. Both indices were breaking out on the downside of the 5-minute opening range. Can you see here the hair? Yeah, the crosshair on both charts. So right here, second attempt I'm sorry, first attempt to have new high of the day. Both indices breaking out to the downside. All right. Okay. I took AMD 942, 942. Yeah, again, that's what I thought. That's what I thought it will be a nice move, right? Because both indices were having a good reaction and the 5-minute opening range low. But again, I mean that's a good level to have a reaction, right? So once we see the drop on the indices, AMD holding nicely here, this key level 131.71, and reacting right where when the indices were reacting, I also will think that this is gonna work. This is gonna work, but they didn't. So, Chris, I think that was a good entry. I think that was a good play. It was just unfortunate that indices, they kept dropping. But I think this was a nice move. This is out of our playbook because we usually like, both indices staying on the top of our ranges for the move to the upside. We don't like the bounces. We don't like the rejections on the indices. But this will be a very nice play. Oh, my friend, you made it profitable. That's very nice. Good thing there. And what about Chris? Did you take same day expiration or next week expiration? Talk to me about that. Because today I wasn't feeling like the price action was like really good, so I took next week expiration. So my loss was a paper cut, like 7%. You will see in a minute. You will see in a minute. But my loss was very small because I was fake by one move, something like this. You will see. Uh, Rael, I thought it was pretty neutral since indices are below the opening print. Yeah. And they were actually inside of the 5 minute opening range, right? So yeah, I was also thinking that this will be a nice play. That's why I chose this this candle here. But actually this 952, that was a better entry. That was even a better entry. Yeah. So nice play there. Nice play there. And then, well, then market the structure, right? So we failed to go higher. So we started to go lower, right? So as you can see here, hey dudes. So as you can see here, this is a lower high right here. And what is expected now? Well, a lower low, right? So for me, this is an overreaction. But look at this. Now that we had this drop and we are having this pullback here, what were the indices doing? Well, the indices were looking very weak, both below the previous day low. So it came here, retested this 130.70 here, and this is a lower high. Can you identify the trend? So if we have a lower high here, I know, this is out of our playbook, but I told you at the very beginning of this call, let's play market structure today. Let's play market structure today. So my next move, if I'm watching this making lower highs, lower lows, lower high, lower low, lower high. So this move, what is expected right now? Well, it's actually expected to go lower than that, lower than this local low here, lower than this. So my next level here will be previous day high. So I will say, okay, I'm easily gonna break this previous day high, and then this is gonna become my support to resistance. So kind of that happened here, It actually never came all the way up to this previous day high, but what do you know? 5 minute opening range high. So it's coming from one key level to the other, right? And right here, it's where the magic ends. Is it? Look at this. Is it magic or what? Let me show you. Is it magic or what? This is pre-market low. Why it says PL? It should be say PML. So this is pre-market low. So SPY came all the way down to pre-market low. And also it was to this 525.73 previous week low on QQQ. And what do you know? Right here, strong reaction on both indices. And that's the end of the downtrend. So the trend is your friend until it's not. All right. Uh, okay. Oh, dude, nice, nice. Nice play. Let's take a look to it in a minute. Chris, you took same day expiration because I was looking for it to work right away. That's good strategy. All right, Rael, that's really nice entry in AMD. I completely missed that as I was looking at Nvidia at the Yeah, yeah, yeah. This one, right? The second one, the going short for AMD. Yeah. Yeah, so as you can see, guys, if market structures stop working to one side, usually market structure starts working to the other side, unless we are having a consolidation, right? Because so we only have three kind of moves, right, for market structure: lower highs, lower lows, lower highs, lower lows, or consolidation, right? This is consolidation. And the last one, lower highs, lower lows. So this is the only three things that we have: uptrends, consolidation, downtrends. So you need to be very smart to identify if a trend just change or if a trend is just pausing, right? If it's just a hold on the next move for the next leg. So these are the only things, the only three things we have: uptrend, consolidation, downtrend. All right. All right. So let's go to the next one here. That's Amazon. Again, guys, you really think that I'm joking with you guys, but this 216 is a brick wall. It's a brick wall. So until we don't break this 216, please, guys, don't believe anything on Amazon. Don't believe it. Just don't, don't, because it's not gonna happen. 216. Listen to me. So let's go to watch. Let's go to watch again this 216 level in play. All right, Amazon 216. Let's watch the 4-hour chart. Look at this. How many touches we had previously, and now how many touches we have here. 216. What's the good news? What's the good news? I think, and that's, I mean, it's not a rule, but I think we are building higher lows. I think, but it could be that we are not. I mean, if this was something like this, if this was something like this, guys, we are right on the breakout of what? Well, maybe nothing, because it may be that we are just ranging here, right? Ranging here, 198 to 16, 198 to 16. So let's see what happens here. I would like to see these two tend to hold for the next leg to the upside, but listen to me, guys. Listen to me. Until we don't break this 216, I actually have an alert right here. 215.50. Can you see? Until we don't break 216, I'm not gonna trust Amazon for longs. Look at this. You can copy this alert. 215.50. So you have some time to react if it goes to 216. But we need a break and hold of 216 in order to believe that this thing is going higher. All right. So right here, I was just watching this. This is just trying to identify. This is just trying to identify good spots for entry. So right here, this 10:10 after the 10 candle, 10 in the morning candle, that it was actually very neutral on the indices. Why? Because it's Topics Friday, so we were not expecting big reaction to data, because all the volatility it's spread on the day, not on the candle, not on the news candle. Anyways, we had a very neutral candle on 10 a.m. for both indices, and what we were having here, more drop, more drop. So I will be just waiting for a nice retest of the previous order block. So as you can see here, it was trying to come here, immediate retest, pre-market low. You know what, guys? I just can't with this. It's pre-market low, all right. And I'm sorry, but I'm this perfectionist. I can't stand with this PL. I don't know when I change it, but not well. Now it looks fine. It looks fine. So okay, so let's do this. So Rael, I'm sorry, Dion is asking 948 put. What do you think, Neto? Well, I think that was super aggressive, but I think it was good. I mean, again, with me thinking that this 216 is not gonna work, and after watching all these, look at this, all these rejections of today's open, look at how many rejections: one, two, three, four, five, six, seven, eight. After all these rejections to today's open, this 948, it's a immediate retest of this 1 minute opening range low. It's an immediate retest. But as I always say, if you are going short, you can be more aggressive than when going long. Why? Because usually this works just like it happened here. Elevator down, escalator up. Elevator down, escalator up. Elevator down, escalator up. So can you see it usually works like that? So would I take this entry here? Maybe not. And maybe not because I was watching other thing. But and I was actually, like, yeah, I was biased for my plan because I was expecting 216. I really want to go long on Amazon, but until we break 216. So I wasn't watching shorting. I wasn't watching an opportunity to short Amazon here. But is it a good entry? I think it is. I think it is. It's not a break, displacement, retest, but as we always said, when you are shorting a position, you can actually go a little more aggressive. So if you took a position here, anything, wherever you left this position, you made at least 1 to 4 risk reward rate to trade, right? I was okay. I watched this entry but didn't open. Yeah, yeah, but yeah, this is a look at this. It was support, turn resistance, and then I may not enter on this candle here, but I will enter on this 949 candle for sure. And I know it was very close to low of the day, but look at this. Look at this. And let's play with this. Let's assume that you open your position here when just below these 3-4 candles here, you have your risk right here on these 3 candles, and you will be looking at least previous day close, at least previous day low. So this trade here, after all these rejections here, and then after this support and resistance, 1 minute opening range low, yes, I will be, this will be my entry. Not this one, not this one, but this one here, right below these 2 candles here, these 3 candles here. This is a level for me. This is a nice level for me because my risk will be very low right here, and my very first target, look at this, 1 to 3.8. This is nice. And look at this, you didn't even have time to cut this position. And once you are here, look at this. If you go bar by bar, you don't cut your position until here. So this will be 1 to 7 risk reward ratio trade. That will be an awesome trade. And if you miss this entry here, look at this. Once you came for this 21160, this is external liquidity. This is a key level on the daily chart. This is a key level on the daily chart. This is an order block here. Why? Because it was some reaction here, right? Look at this. These order blocks here are where exactly? Pre-market low, expected reaction. And what about this new order block? 21160, key level on the daily chart, expected reaction. So now we have this break and retest of this key level here. So this key level here, it's an order block below this key level on the daily chart. So if you open your position right here on this rejecting candle here, you open your trade on the next candle here, and you were aiming to a 1 to 2 risk reward ratio trade, look at this. You will have this nice trade. And if you were brave enough, it's not about being brave or not, but if you took partials here and you are watching this, well, this is why you start looking for market structure. So here, this is your lower high, lower low, lower high. So you may be cutting this position here, but look this nice reaction here into this consolidation area. Look at this nice reaction here. So if you manage to hold this, your target should be this one, and you actually hit it, right? And it was a 1 to 3.5 risk reward ratio trade. But that will be only if you took partials here, and here it's a 1 to 3.5. So maybe, and I'm just saying, maybe you cut like 50% of your position here. So on this retest, you are break even, so you still are 25. I don't know. I don't know how much these contracts move, but if you were break even here, you may think like, well, probably I can just try to see if this is going lower, right? And because if you are watching the indices, what the indices were doing, they were still dropping. So again, this is all context, guys. Market structure, what the indices are doing right here. Look at this in this candle here. It was retesting previous day low on SPY. It was retesting previous day close on QQQ. So they were looking very weak. They were looking very weak. So if you manage to hold your position here, you actually got this clean next leg here. And what is going on? Oh, it's going lower. But that was too late on the day. And here, look at this. This was 11 in the morning. So this is still inside of our trading hours. So you should not be staying here for too long on Fridays. All right. Okay, so that was all for Amazon. I just want to make sure that you all are watching how market structure is telling us when to enter and what to expect. So you should not have any expectations on the market, but when the market structure is playing, like, okay, well, this is my previous low, if this is a lower high, well, my expectation is to have a lower low. So where this lower low should be, well, you start looking at next key level, next round numbers, next strike. That's how you do it here. All right. So let's go to the next one. Nvidia. Let me tell you what I tried. I tried this one here. My risk was right here. No, my risk was 1 minute opening range low. I was aiming to 147.42. This was my trade on Nvidia, and oh, I want to show you what I was watching here. Probably you guys were watching the same thing because I know some of you were waiting for Nvidia, and Nvidia was looking good because it was above this previous day high, this 145.65. So it was looking good with this hold of 145.65 here. So I opened my position right here, 945, 945. I was expecting a move higher here, and the one thing that was very unfortunate that was the very top of the indices. So SPY hit pre-market high, QQQ hit that 533.33 key level on the daily chart and also pre-market high. And right there, instead of having some continuation, it rejected. Again, I know I told you at the very beginning, OPEX Fridays usually it drops. I know, but this was looking good. This was looking good. And usually the drop is not at the very beginning. So, well, I took this trade here and I was to stop on this one. Yeah, so I think it was something like this. Yeah, because I was out here. 10:03. Yeah, right after the 10 a.m. candle. So, and why was that? Well, because I was watching failing to create new highs. Again, this try here, rejection. So I couldn't stay for so long just to see that this is gonna be downtrending. And look what happened here. Exactly the downtrend was coming again and again and again. So this is the market structure I'm trying to tell you, right? So it's a lower high, I'm sorry, lower low, lower high, lower low, lower high. And now what we are expecting here? Well, lower low, and here, lower highs. And, well, again. So remember, if you watch market structure to be to the other side, just wait for reactions on the key levels. Look how many reactions. Support, 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 boom, break, flip, turn resistance, resistance, boom, drops. All right. So this is market structure playing nicely today. So today I chose, let me tell you what I did. I think it was the 146 calls. Yeah. I think it was 146 calls. I'm pretty sure it was 146 calls and 147. Well, now I don't remember 146 or 147, but I chose next week expiration, and also I was like in a lighter size OPEX Friday. So right here it was like less than 10%. I think it was like 7 point something or 8% negative. So this was a very nice paper cut. It was just, some feedback for me, for my system. Like, okay, dude, you should be waiting for what? breakouts on the ranges on the indices, so you can have a clear trend. So right here, it's not a clear trend. Yes, we are on top of the range, but it's not a clear trend. So in my journal, I will have that this was kind of an early trade, let's say. And it didn't work, and that's fine, but well, wouldn't you wait for 145 low to break to develop break? Uh, well, yeah, but I look at this. I had this entry, Ilya. I had this entry here right on the pre-market high, so I wouldn't stay too long for this. I will prefer cutting my position here with a small loss, and if it comes back later in the day, I can easily retake this as an 84% rule or something like that. But no, I prefer to take a small loss, and then if it, if it presents itself again, I can take it. But I don't want to have all this as my risk. I prefer to have a paper cut loss and then retake this trade, right? And that's important, Nila. Let me tell you that why risk management here, it's very important, because if you are willing to risk all these may be now a 20 or 20 something percent loss, right? But here it was an 8% loss, 8% loss. And if it goes lower, well, that's fine. But if it comes back and for some reason it comes right to my entry point with, same market structure, or, the this setup intact here, from my entry point to here, it's not going to be 8%. It's going to be maybe 20%, 25%, even with next week expiration, right? So this loss will be recovered very easily with a nice trade to the upside. So I prefer to have a small loss here, and if it was a second chance, I will take it right here. And I don't care, because it was a very controlled small loss, and this will be a 20-25% 20-25% win. Um, Neto, why you didn't put your stop loss on the daily gap? On the daily gap, like here? Well, I like this. uh, but yeah, I mean, it may be nice, right? Like here with all these candles retesting this daily gap. The thing is that this daily gap, it's minimal. So yeah, and my thesis was on the higher time frame. If we break this 146, if we break this 146, I will easily see 150 here. So I was willing to risk a bit more here, but because the other thing that I could do was, you know right here at the bottom of these retesting candles, but it was just too small of a risk for a higher time frame thesis, right? So again, this will be a 5% loss, maybe, and I could take it again, but I was just waiting for this support, support. Look at this. Even here, I mean, even when I was stopped right here, it actually turned to be a strong key level. This one, right? 145.36 or 140, yeah, 145.36, or this 145.29. That's the 1 minute opening range. So once we broke this, then this support turned resistance, and then it dropped. Right. And then it dropped, and look at this. We had this break, good displacement and retest of the 5-minute opening range. This was actually very easy to spot. It's the 5-minute opening range here, good reaction here, and look what was happening on the indices. Right here, SPY came, retested previous day low right here. So this is the kind of trades that are annoyingly easy. Annoyingly easy. This is a clear break, displacement, retest, and what the indices were doing, strong reaction on key levels. And damn it, it was a super easy key level here, previous day low on SPY. So I will open my position here right below these candles. That Nvidia short entry was almost like a textbook trade. Yeah. Annoyingly easy, right? Annoyingly clear, annoyingly easy. 1040, super inside of our trading window. So open a position here, and what's the next level? Well, I was being uh, I was being nice here, but low of the day was 122.6 risk reward ratio trade. 143.83, that's a key level on the 15-minute chart. It was a 123.76 risk reward ratio trade. But the real target here should be this previous day low. And this was a 1 to 6.6 risk reward ratio trade. And again, this was annoyingly easy, and I don't want to watch it again. So anyone has a question about this? About the stop loss, Dian? I know, I mean, depending depending on the risk that you wanted, because if I was taking same day expiration, I will be something like this. I don't want to take too much of a risk, and I will prefer to enter later and all that. I was taking next week expiration, so I was willing to take a little bit more risk because it was a higher time frame thesis, but it didn't work either. But there's no need for me to go against all these market structure, all these rejections on key levels. So I just take a small loss right here. Sven, yeah, annoying. And Robert, I'm sure we will see this in Lauren's trade review. Yeah, she loves Nvidia, right? She loves Nvidia and Tesla. Kind of annoyed that I was not trading today with that Nvidia setup. Yeah. Again, this was annoyingly easy textbook. Nice reaction on indices. Super clear reaction right here. 5-minute opening range. Look at this. Even with this trend line here, it was the exact rejection right here. Exact rejection right here. Yeah, so again, annoyingly easy. And what do you think about Tesla? So Tesla, again, we broke this 5-minute opening range here. This, let me pull this down a little bit. And give me 1 second to drink. Coffee. All right. So right here, we have, look at this. We have two different opportunities. Well, a few different opportunities here. And I want you to watch all of them because this was also kind of annoyingly easy, right? You will see. You will see. So here we have this rejection of pre-market high, then this drop, break of 5-minute opening range low, and how we call this, bear flag. Bear flag. So this baby small pullback, it didn't retested this 5-minute opening range, and when this candle closed, it was already low of the day. So we don't take it like here unless you are being very aggressive. But right here, look at this. Right here, it was the first rejection. It was the first rejection on high of the day. So we still are not sure about weakness on the indices. All right. So right here, we are still not sure about weakness on the indices. So this is not a good candle to enter right here. But what about this? We draw this order block here. Let's say it's right here. Order block here. Look at this. Order block here. Break, displacement, retest. And now right here, what the indices were doing. All right, here, this is the time of weakness for the indices. So we came from high of the day to low of the day, about to start the breakout to the downside. So this, with some room to low of the day, look at this, some room to low of the day, you take a trade like this, and you can say, well, on the candle closure or right below the previous retesting candle. So anyway, if you took this and you were aiming to low of the day, it was a 1 to 2.4 risk reward ratio trade. But this is just a little. Let's go for the next key level, previous day close. So look at this right here. Even if you take it at the candle closure, even if you take it next two candles here when we break this 324.68, it was a 1 to 2 risk reward ratio trade. But once you start riding this, it's about market structure. So we have here a lower low. So we expecting here lower high. And look at this. And now we have a lower high. And what are we expecting here? Well, a lower low. And now what we are expecting here? A lower high. And can you see where? Key levels. Look at this. Key levels, order blocks, right? And everything is fun until we don't have, this is an equal low, and right here, this is a higher high. So here is where the fun ends, at least for the downside. Can you see here? So you actually have a few other two opportunities here to enter for Tesla shorts, right? Anyone took Tesla short here? Let me go to the chat, okay? Nvidia short, Lauren, Patrick, Google. Let's go to Google in a minute. Have a nice weekend, Rael. All right, so Tesla, piece of cake, right? Let's go to, well, Microsoft, same thing. Break, displacement, retest. What is this? 481, previous day high. So rejection, drop, retest, rejection, boom, drop, retest, rejections. So this is about market structure the whole day. What about Meta? Well, nobody cares about Meta. Palantir. I was looking at this Palantir, but I chickened out because I was on the Nvidia trade. This was a very nice break, displacement and retest of what? 5-minute opening range, order block here, or if you want to be here, something like this. Order block right on key levels below this 140.36 previous day high, below this 140.22 5-minute opening range low. So if you decided to take a trade right here, you were aiming to the next key level, pre-market low, 1 to 2.5 risk reward ratio trade. But this actually worked all the way down to previous day low, 1 to 6.8. All right. So again, you have different opportunities here. Low of the day. This was low of the day. And then break, displacement, retest, pre-market low. Yeah, until the market structure change. When? Here, right? Higher high. This is a higher high than this. This is the change of character here. Or this is the change of character here. Right? Look how well this previous low of the day work, support, resistance, resistance, support. Let's go to Google. Talk to me, Patrick. What you did on Google? I'm gonna use Google with an L because I don't have any. I don't have any levels on the other Google. But what did you do today on Google? Patrick, can you share what you did with Google? What candle you enter? What was your risk? And what candle you start trimming? I think because this is the most obvious trade, you enter somewhere around here, 1020. Oh, 1020, 1020, 1020 here. Why 20, 1020? And exit pre-market low. Well, look at this. Break, displacement, retest, previous day low, 5-minute opening range low, and this is even the 15-minute opening range low. And 1, 2, 3, 4, 5, a few rejections from this 5-minute opening range low. So if you have this as your entry and you have this as your risk, and you will be aiming, let's say, pre-market low, it was a 1 to 2.4 risk reward ratio trade. And then you will go to round numbers, right? 174, I'm sorry, 172. It was a 1 to 3.2. And look at this. I mean, if you stay here with market structure, so unless you break pre-market low to the upside, you stay here. And if you stay here, look at this. Look at this. Wow. It may be different in Google. All right. Let's try it. 1020. All right. Yeah, it's kind of different right here, right? So this is the 5-minute opening range low. 1020, it's this one here. Your risk will be maybe this candle here. And you were aiming to pre-market low. This was a 1 to 2.5 risk reward ratio trade. But look at this. Look at this. I mean, if you held all the way to pre-market low, wow, this drop was amazing. This drop was amazing. Yeah, so it was kind of different, Patrick. Yeah, you were right. So you were right. You were a coward. Well, you were selling into strength, right? You were selling into strength. There's nothing wrong with it. There's nothing wrong with it. If you were following your plan, that's fine. I just want to see this. Well, there were a few hints for you, Patrick, to stay on this trade. Can you see these reactions on SPY here? Right here, right here. This is previous day low. So while you stay below previous day low, you still are bearish, and you miss all these that, look at this, happen to be from 172.84 to 170 to 170. So, well, you miss a lot right there. So my only suggestion will be try to stay connected, not only to market the structure here, because this was a nice move. This was a nice move. And because these reactions here, I mean, you were not expecting a pullback here, or maybe a pullback here, but I mean, you can, unload 50% of your position here on these key levels, and you keep 50%, or maybe you sold 80% your position here because it's a Friday, OPEX Friday. So you stay with 20% here. This 20% all the way to here was double the money than this 80%. All right. So just try to stay connected to your trades. I understand this was your plan, but I mean, you can always try to stay connected to your trade. And if there are hints that this move can, continue, that will be awesome. All right, guys. I think that's all for me. If you don't have any other questions, I have a few suggestions. So please don't leave yet. First suggestion, please like the video, subscribe to the channel. That's my first suggestion. Please, please, please. Second suggestion, journal all of your trades, not only the ones that you won, all of them. And if you can, journal same day, especially the ones that you took a loss. Why? Because the fastest you face your mistakes, or the fastest you face what you did wrong, the fastest that you can come over with a solution, come over with a lesson. And that's way more important. All right. So face your mistakes, face your losses, and took the lessons from them. All right. And what else? Detach from charts for the weekend. Come on Sunday, refine your charts, take a look to your daily charts, then take a look to your 15-minute key levels, and come prepared on Monday. Come prepared with your levels, come prepared with your plans. Please, 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 just do something. This is about preparation. Preparation is everything, right? Because if you are prepared, there's no trade that can take you off place. If something goes wrong, you already have a plan. If something goes well, you already have a plan. So the more prepared you come to your sessions, the more calm and better you react to anything on the market. All right. Diane, can we use the bullish order block for downtrend? There's no bullish or bearish order blocks, Diane. The order blocks are just a zone where there's a lot of liquidity, or there are a lot of orders to be filled. So price, in order to go look for more liquidity, just come back, take more orders, and continue its way. All right. But there's no such bullish or bearish order block. All right. So guys, that's all. Please, I have 28 people watching the video, but only have 11 likes. Go like the video. Please subscribe to the channel, and I'll see you on Monday. All right. Peace. Bye.